On behalf of the Sustainability Reporting Standard Board, myself CA Shweta Goyal, Secretary SRSB, would like to extend a very warm welcome to all our guests and moderators of today's session. This is the sixth series of our webinar, Demystifying Sustainability and Catalyzing Growth, which is featured on every Thursday from 4 to 6 p.m. Our today's session is centered around a critical theme of Sustainability Reporting of India, BRSR versus IFRS S1 and S2. We are honored to have with us today our chairperson, CA Preeti Savla ji, and our esteemed speaker, Ms. Achal Mathur ji, and our moderators of today's session, CA Timal Maru ji and CA Prajeet Gandhi ji. Let us now begin. I would like to invite CA Prajeet Gandhi ji to kindly take the session forward. Over to you, sir.
Thank you, Shweta. Good evening, everyone, respected chairperson, vice chairman, and my colleagues on the dais. So good evening, everyone, and we welcome Anshul to the session. Today's session is, as Shweta mentioned.
Sir, sorry to interrupt you. Our chairperson is with us. Welcome you, ma'am, CA Preeti Savla ji, our chairperson.
Hello, everyone, and welcome all of you to this session. And this is our series we have started on sustainability. And today we have the session on this our BRSR and what is IFRS S1 and S2, and what are the gaps between IFRS S1 S2 and BRSR reporting. So we have already mapped that. We have also discussed the same with SEBI also. And let us see what is the way forward of SEBI. And Achal is very dear friend. She is going to lead this session. So thank you, Achal, for your availability. And Prajeet and Thimalbhai for moderating the session. Friends, I request all of you to stay connected and watch our series on every Thursday, 4 to 6. And we are always there to support our members. It is our endeavor to serve the best to the members of our institute. With these words, I welcome all of you to the participants and thank our office, Shweta and entire team for this session. Thank you very much.
Thanks a lot, ma'am. Thanks for your addressing the participants. Over to you, Prajeet, sir.
Thank you, Preeti ma'am, for the kind words. Just introducing our speaker for the day, Anchal Mathur is a seasoned sustainability and ESG consultant. She's a manager at InCorp Advisory Services, specializing in corporate sustainability, strategy, ESG compliance, and carbon transition. She has led more than 60 plus projects, helping India's top corporates navigate ESG reporting, assurance, and impact assessments. She is also a very passionate educator, having designed and delivered 20 plus executive training programs on net zero strategies, ESG risk management, and global reporting standards. She has actively contributed thought leadership through publications and speaking engagements as well. We welcome you, Anchal, on today's session, and we look forward for an insightful session on comparison of BRSR with the standards issued by IFRS, that is S1 and S2. Over to you.
Thank you so much, Prajeet and Ms. Timal, and of course, thank you, Preeti ma'am, for the warm welcome. Special thanks to everybody who have joined today on an off day during the afternoon. Thank you for taking the time and showing interest in sustainability. So like it's been introduced by all, before me who have spoken, that today we are going to speak today I'm going to speak about, look into the BRSR framework, a little bit of a deep dive. Then we will look at the IFRS sustainability disclosure standards, specifically S1 and S2, which has come out recently, a bit in detail as well. And then we will move on to contrasting and comparing both the frameworks. While right before the session, Prajeet and I were discussing that the frameworks are quite different. It's not so easy or straightforward rather to compare them, but let's just see, sort of what are the points that they can be contrasted. And in brief, I'll also try and take you through some trends that may be expected in the future. This is based on a research that I had conducted, looking at, various data points. It's a secondary research. So I'll walk you through all that as well. I'm sharing my screen now. Hope it's visible.
Ma'am, it's just opening.
Okay.
Yeah, ma'am. Now it's visible.
Great. So to begin with, I want to take up a minute of your time to take you through how ESG itself has evolved globally. Before we, sort of come to today's scenario, it will set up some context as to where we are coming from and will help us understand where we are going towards the end of the session. So, uh, to my surprise, when I did this research, I think all of this started in the 1950s itself, much sooner, than I was thinking. So in the between 1950s and 80s, discussions had started to take around the world, mainly around social responsibility of businesses, their ethical responsibility, what do they owe to the society, right? And there were a lot of movements during the 60s, around the social and ethical responsibility of business, and there were a lot of news in the media that started to come up regarding the social impacts that businesses were creating. And in 1971, we saw the first fund to come up in the world that would only invest in responsible companies. Right, that all happened till 1980s, and then in the 1900s we saw very concrete development from the United Nations front. We saw, where UNEP made financial institutions to commit into their role to build sustainable economies. That was the first step.
मेल कर दो ना और फिर आपको टाइम दे देते तो फिर वो विजिट भी हो जाएगा वो भी बोल दिए वो उनका असिस्टेंट है उनका नाम भी आशीष है
Can someone please
और
go
मेरा
on mute? I think you're unmuted. Yeah, thanks. And in the 1990s is when the yearly COP meetings, COP conferences started to happen. That, the Paris one being the most critical one that we have seen. And even the Kyoto Protocol, which was the first ever conference of parties that, focused on lowering GHG emissions and talked about the shared responsibility of the world, in reducing the emissions. In 2001, 2000s is when the term ESG was coined, which by a landmark report titled "Who Cares Wins." Right? If you have not read it, please read it. It's very interesting, which led to the launch of the principles of responsible investment. And a lot of companies in India are signatories to the PRI as well. Right. In the 2000s, 2010, right, is when SASB was formulated, is when TCFD was formulated, and GRI was also launched in the 2010s, leading to present where now ESG is part of mainstream. It's what we hear about. It's all what businesses are talking about. It's the entire strategy of leading businesses is focused on ESG reporting and compliance and improving their performance. In the light of this, we have a large set of frameworks and ratings that is available across the world today. And there are different types of frameworks. So if you see, let me just, yeah. There are regulatory frameworks like CSRD, ESRS, BRSR, and then there are country-specific frameworks like, Singapore Stock Exchange or Hong Kong Stock Exchange or Japan Stock Exchange. Then you have globally relevant frameworks like GRI, IFRS, TCFD, CDP, SASB, all of that. And then you have sector-specific frameworks also. Say for example, GRESP is a framework that is very specific to real estate and infrastructure funds. You have different taxonomies, guidelines, and accounting frameworks as well. And in terms of ratings, so there are, now we all know that India has launched its own ESG rating mechanism. And I think the latest update is that we have now 17 listed rating agencies in India, as per SEBI, that are listed on SEBI. So there is a whole universe available of ratings, of framework. So how to navigate this? Right, what is the method to this madness? There is just so much. If you are a company who is just starting to report, how is it that you look at all of this? So here, I've listed down the main sort of central frameworks that are available in the world today. Again, this forms as part of the background of today's session. GRI being the top reported framework in the world today. This is also called as the mother of all frameworks. Why? Because as we saw in the timelines, GRI was one of the few initial frameworks that had come in addition to the TCFD. And GRI was the first framework that became applicable to all stakeholders that a company might have, not just investors, not just financial stakeholders. So even the BRSR framework as such is taken largely from the GRI framework. Then we have the TCFD framework, which is for focused specifically on the investment risk of climate change. As part of TCFD, you have to do scenario analysis to see as part of, how the company is going to perform in case of 2-degree climate change, 1.5-degree climate change, so on and so forth. This also is aimed at, investors and informing their financial decisions. Then we have the SASB framework, which is Sustainability Accounting Standards Board, and it focuses mainly on the financial impact of ESG risks. So again, a predominantly financial framework that is in place. Next, we have the Integrated Reporting Framework, which works on the 6 capital framework. I think most of you are familiar with that: financial, natural, human, intellectual, manufacturing, and social capitals. Then the framework in focus for today, IFRS S1 and S2 by ISSB. These were found, these were formed by, amalgamation of a few frameworks, and very focusedly IFRS caters to the financial, requirements of investors to help them make more informed and transparent financial decisions about whether or not to invest in a particular company. And ISSB encourages all the companies to sort of report in all transparency with the main aim of informing financial decisions of investors. Then we have 2 frameworks from the European regions, the CSRD and CSDDD. CSRD is also been, in news recently because of the omnibus that, got released. And this covers all the EU entities as well as entities that are exporting to the EU region. And CSDDD is a law specifically requiring companies to conduct DD, due diligence on human rights and environmental impacts across their value chains. Now, moving to sustainability reporting India, I want to take you through some recent changes, that have happened in our country with regards to sustainability reporting. So one is ease of doing business, which came out late last year or early this year, which is very specifically regarding ESG disclosures for value chain. So as we know, value chain reporting had become mandatory 2 years back, applicable from 23-24 disclosures. But a lot of companies, were facing great amount of difficulty in gathering and collecting and reporting data of their value chain partners, specifically the value chain partners that are, from the MSME categories, because they do not have established mechanisms of recording data. So it became almost impossible for companies to report the current year's data, let alone reporting data for the previous year also. So in light of the challenges, this new guideline came, which made value chain reporting voluntary. So that is the first thing, that it got deferred for 1 year. Reporting is now to start from 25-26, and assurance statements to start from 26-27. And all of this has become voluntary. It's a voluntary disclosure as of today. It has not been mandated. Even the scope of reporting has been reduced. So the scope of reporting is now only to include the value chain partners which are individually contributing to more than 2% of business that is being done with the company. So any business that is less than that 2% value of revenue or sales value should not be included in the reporting. And the first previous year's reporting also has been removed. So companies only have to report 1 year's data. So correct. So also a green credit disclosure, has been added in Principle 6, which I will talk about just in my slide forward. Another regulation that has happened this year only, a couple of months back, is the greenhouse gas intensity target rules. So the Ministry of Forest and Climate Change launched this rule on 17th of April 2025 with the purpose to align with India's NDCs, the nationally determined targets that we have um, the nationally determined targets that we have committed to the United Nations in the Paris Agreement. And the aim is through this rule, the aim is to cut emissions intensity by 45% by 2025 as compared to 2005 levels. So the good thing here is that they have given a base year also of 2005, and the target is 2030. For this, so far it is applicable to 130 companies, which they have specified, and only in these four sectors. So, aluminum, cement, chlor-alkali, and pulp and paper sectors are the ones that are implicated by this right now. Others also specifically manufacturing in these sectors. Other sectors have not been implicated. And the methodology is that companies have to reduce the tracked emissions at the plant level. So per ton of carbon emissions at the plant level have to be reduced. And in fact, the companies, these 130 companies, have been given direct targets also in quantitative terms as to how much they have to reduce by which year. Also, apart from direct reductions, the companies can purchase carbon credits to reduce their emissions or show reduced emissions and have company specific targets. In case of non-compliance, there is a penalty, which is either they have to buy carbon credits of the equivalent value or pay environmental compensation, which will be twice the average credit price going on at that particular period in India. And then finally, the Green Credits Program, it was launched by SEBI. It's become part of the leadership indicators in Principle 6 from 24-25, with the purpose that, what SEBI is saying, that businesses should respect and make efforts to protect the environment. And that is why they have introduced. Also, this is a push, I feel, to bring in the carbon credits market more strongly in India. The coverage is that whatever the company directly purchases or their top 10 value chain partners, whatever credits they are purchasing can be reported as part of Principle 6. And these are the permitted activities. So the credits have to be purchased through tree plantation on wasted or degraded land or on water catchment area. So they have laid out very specific requirements to qualify for this disclosure and emission reduction as part of Principle 6. Moving on from the recent changes, now let's take a deep dive into the BRSR framework itself. So I have a question here. How many of us are aware what is BRSR framework? How many of us have maybe worked on it or read about it or seen it? You can just message in the chat. You can say yes or no. Has anyone worked with BRSR so far? Have you seen the framework before? I think there were a lot of people in the waiting room. Technical team, if you can say.
Yes, ma'am. We are just looking it.
Great. Now that more people have joined, let me repeat my question. Has to all of those who have joined today, do you know about the BRSR framework? Have you seen it before? Have you worked with it before? Any idea what the BRSR framework is before we go into it?
Ma'am, we are receiving a reply from the participant that yes, they are working on the BRSR report.
Okay. Okay. I think I can't see it. No worries. Thank you for letting me know. So BRSR was introduced in India starting from 2021. Leading up to it, there were quite a few events that had happened, which led to the formation of the PRSR framework itself. I will not go through the entire thing here, in the interest of time, but I will walk you through the first step, the first concrete step, which was the introduction of business responsibility reporting, which became mandatory for the top 500 listed companies in 2015. So these top 500 companies have been reporting on the BRR framework since then, and BRR was very specifically speaking just a qualitative framework. It did not include any quantitative aspects. Neither did it include any calculation of emissions or any reporting of environmental data, right? But in 2018, the NGRBC guidelines came into play, and the BRR was extended to top 1,000 listed companies, which was then, proposed and converted into the BRSR report by MCA in 2020. Right, and it became applicable from 2021 onwards, and I think in 2020 it was to be done from on a voluntary basis. So companies who wanted to prepare for the BRSR in 21, they did their voluntary reporting in 2020, and BRSR became applicable again to the top 1,000 listed companies itself. So it was voluntary in the financial year 21-22, meaning in the year 22 it was 22-23 it became mandatory, and in 23-24 a lot of significant changes happened in the BRSR. So BRSR core was announced. There were new fields that were added. So to those of us who have been working with BRSR, you would know that a lot of financial metrics got added in BRSR, starting last year reporting, like your parameters on spending on measures of well-being, and dealings with the trading house, openness of business, job creation in rural, urban, semi-urban and metropolitan areas, so on and so forth. So companies were required now to not only report on the non-financial parameters, but a few financial parameters were added specifically to BRSR core, and this was I think aimed at to facilitate assurance and facilitate the audit of the BRSR core data, because in a lot of cases the backups or the proof or the documentation can be found in the financials or the books of the company rather than the non-financial dynamic data. And that is a more concrete way of assessing a particular indicator as well. In that year, again, the mandatory assurance for top 150 companies was launched, and value chain reporting for top 250 was launched. And this year, 24-25, ease of doing business, what we saw just a while back, is something that that got introduced as well. Now, looking at how the BRSR framework is structured, just to give sort of a visual clarity, there are 3 sections in the BRSR framework. The first section is general disclosures. You have then management disclosures and principle-wise disclosures in section C. So the general disclosures talk mostly about, about the company, about the report, about its business, what business is the company engaged in, its presence in terms of geography and locations, the types of business activities, the contribution of various business activities in terms of percentage of revenue, so on and so forth. The employee bifurcations, board diversity, and the material topics of the company. All of this goes into section A. Then section B mainly has information about the governance layer of the company, how the company is formulating policies, procedures, and how they are reviewing it. So the coverage includes policies on all 9 principles, right? So what all policies are there, whether a policy has been formulated or not on each of the 9 NGRBC principles is something that gets covered in section B. Then whether each policy has a procedure or not, right? Whether it's just a documentation that the company has done, or they have actually gone to the level of creating SOPs and allocating responsibility to departments to fulfill those policy agendas. Then what kind of certifications does the company hold for each of the 9 principles? So again, this section B entirely is divided according to the 9 principles, and each of these questions have to be answered for each of the 9 principles. Then delegation of responsibility. identification of board members who who from the management is responsible for the BRSR reporting, who has oversight, right? These sort of questions are there. And then the company's targets. So what targets has the company taken and what has been the performance year on year also has to be reported. However, there is no clear direction or guidance as to what sort of targets should be reported, whether companies are to report quantitative targets only or qualitative targets are also okay, so on and so forth, has not been included. And then section C is principle wise disclosures, which is further subdivided into two parts. That is essential indicators, which are mandatory to be reported, and leadership indicators, which are voluntary in nature. Companies may or may not choose to report on them. However, it is advisable for companies to go ahead and report on leadership indicators because, as the name indicates, it shows leadership on part of the company to achieve its sustainability goals. So this is a brief look into the 9 principles. First principle is regarding ethical, transparent business conduct. Principle 2 is regarding sustainable product. Principle 3 is regarding employee well-being and, of course, worker well-being as well. Principle 4 is regarding stakeholder engagement, how the company is engaging with its different stakeholder groups, what is the kind of communication that's happening, how frequently is the communication happening, so on and so forth. Then principle 5 is human rights. So everything with regards to human rights, POSH, child labor, forced labor, assessments across the supply chain on various parameters, assessments of companies' own sites and locations across various human rights parameters gets covered as part of principle 5. Then principle 6 is on environment, so consumption of energy, fuel and electricity, generation of GHG emissions, all scope 1, 2 and 3, generation and utilization of waste, how the company is managing its waste that is getting generated, the water that has been consumed and whether the water is getting recycled or whether it is being discharged properly or not, so on and so forth. All of these types of questions get covered as part of the principle 6. Then principle 7 is policy and regulatory framework, which mostly talks about the public policy advocacy, which may be done by a company or its management. So how the company is interacting with industry bodies, how is it that the company's management is contributing to the larger industry with regards to their actions to improve the sustainability of their industry. Moderators, I'm getting a notification of people in the waiting room, if you can look at that.
Yes, ma'am.
Then principle 8 is regarding equitable development of the community, of the society. So all information regards to CSR gets covered over here. So interestingly, no financial information has been asked, with regards to CSR. It already gets reported in the BRSR, in the annual report of the company, in the CSR report as well. BRSR mainly focuses on the impact that the company has created. Right, what is the kind of how many souls, how many lives has the company impacted positively, what has been the nature of that impact, is the company focusing specifically on districts that are called aspirational districts as identified by the Indian government to create the impact where it is needed the most, right? So these sort of questions are asked to understand how committed a company is really to create a community impact as well. And finally, principle 9, which talks about value to consumers. So information with regards to how the company is interacting with customers, questions on data privacy, security, all of these incidents, if they have happened, so on and so forth, gets covered as part of value to consumers. Also, what are the initiatives that the company is taking to ensure the safety and well-being of its consumers as well, right? All of this gets covered as part of principle 9. Now, this is a breakdown, what we just discussed of, all 9 principles. Some of the, This slide basically talks about some of the main data points that get covered. Overall, in the BRSR, you have more than 30 policy matters, more than 100, I think more than 120 data points that are asked. Mainly, data is required for 2 years. In some cases, it is also required, for 3 years. This is specifically for a few questions in Principle 3. Then the stakeholder voices and their impact gets covered in the BRSR to a great extent. A lot of information on training and awareness and initiatives is also covered in the BRSR report. So looking at principle 1, it touches upon corporate governance, board diversity, policy and grievance methods, and anti-corruption. And grievance methods not only for shareholders but also for all other stakeholder groups like employees, community members, regulators, suppliers, workers, so on and so forth. All of the stakeholders get covered as part of the grievance mechanisms. Then principle 2 covers product sustainability, sustainability sourcing, life cycle management, and packaging. So even the life cycle assessments, if the company is, focusing specifically on its environmental impact of its products or services, they go ahead and do life cycle assessments, and that gets reported in principle 2. Then principle 3 is about employee well-being, diversity and inclusion, L&D, and career reviews and career endings of the workforce. Then principle 4 talks about stakeholder identification and communication. Principle 5, like we discussed on human rights, so data points like minimum wage, median salaries, grievance mechanisms of harassment complaints, of posh complaints, coverage of vendors, right? All of this are the concrete data that gets asked as part of human rights disclosures. Then principle 6 we discussed, principle 7 also we discussed, principle 8, social impact assessment has to go there, complaints for community members, CSR, and any preferential procurement if the company is doing. And on principle 9, we have consumer complaints, any recall or replacements of products that were sold due to any safety issues that happened, issues of data privacy and product disclosure and information. Right, so this is the entire universe of BRSR. It is as broad and extensive as it seems here right now. It's a very detailed framework, but also very structured. So it's easy to attempt a BRSR framework because the requirements are laid out very directly. SEBI has gone ahead and given a lot of guidance documents on the meaning of specific terms, on the definitions of specific terms. Also, they have defined formulae for calculating a lot of the information that is required by BRSR, and I'm going to cover that as part of the challenges with BRSR reporting also. Any questions from anyone so far?
Still no
Yeah, ma'am,
questions.
there are two questions basically.
Okay. Mhm.
The first question is, ma'am, first question is, how can SMEs integrate the sustainability without compromising the growth?
Interesting question. That's a lot of forums have been talking about this particular issues. So what I would advise, in my experience of working only with large corporates and some small firms, is that SMEs need to take one step at a time. There is no need to attempt the entire BRSR and publish it. The first way would be to first do a gap assessment with regards to BRSR, understand what are the gaps, what data is there, what data is not there, establish dedicated teams or at least one or two people, if there is bandwidth for that, who are specifically looking at the sustainability agenda of the company and will help. So I've seen non-listed companies where although operating at a larger level, but one person was hired as a sustainability head, and he was able to rally the entire organization into not only starting BRSR reporting but also starting sustainability reporting in alignment with GRI, and also targeting ratings like EcoVadis and show year on year improvement, right? So not to think on the lines that the organization is small and it cannot do much, but rather look at what is it that we can do at this stage and target that. And it will also help, say, to take either hire someone who is a sustainability expert, or take guidance from someone who specializes in sustainability reporting, or a company, just to get a plan on how to start. So recently, I've started working with my organization with a company that is into real estate construction. Specifically, they are they are into projects of residential real estate, and they are already doing quite a lot in terms of water recycling, afforestation, solar panels, renewable energy, so on and so forth. So what we are helping them in the first year is only to start recording data as per GRI, because that's what they want to do. So again, to come back to the first point, the first step would be to identify what are the gaps vis-a-vis the framework that you are targeting, and then see which gaps can be addressed in the easiest and the most shortest time period, and then have a plan for the next 3 or 5 years as to how you're planning to come to a stage where you can start reporting. What's the next
Ma'am,
question?
yeah, next question is, ma'am, someone is asking how to work on the assurance on the BRSR. So they're asking which are the applicable standards which need to be considered while giving the assurance of the BRSR code.
Got it. So there are few standards that are there, but the most commonly used standard globally is the ISA 3000 series. That is what companies look at. So in terms of assurance, that is the standard that can be looked at. Any other question?
No, ma'am.
Okay. So moving to BRSR core. Okay. First, let me clear out the doubt. BRSR core is not a separate report. Okay, it is part of the BRSR framework itself. It becomes, in fact, a subset of the BRSR. So BRSR core is just a collection of 9 broad indicators, which is already ingrained in the different principles of the BRSR framework. The purpose, as we discussed in the first few slides, for those who had not joined till then, um, BRSR core is specifically used to conduct assurance or assessments, right? So any assurance on BRSR that you hear of will be happening on the BRSR core parameters only. Having said that, this is the external mandatory assurance. A lot of companies also go for internal assurance, and they want to assure their entire BRSR report also. That is another practice, right? And the second purpose of BRSR core is that on those 9 indicators is what companies need to do their value chain reporting. So when they have to collect data from their value chain partners, it is only on these BRSR core 9 parameters and not on the entire BRSR report. Right. So this is what BRSR core is, but I want to take you through, the indicators, that become part of BRSR core. So first is the GHG emission footprint, which covers total scope 1 and 2 emissions, and the intensities based on purchasing power parity and the products or units sold. The second is water footprint, which talks about total water consumption, water discharge, and levels of treatment, and the intensities therein. The third is energy footprint. So total of energy consumed. Energy consumed would include your fuel and electricity both, and percentage of energy which has come from renewable sources and intensities of these. Then embracing circularity on waste management. So this includes the entire segment of waste data, which covers the waste generated, waste recycled, waste reused, waste diverted from waste, everything, and the intensities also of the waste. Next is enhancing employee well-being and safety. So, spending measures on well-being of employees and details of safety-related incidents. So, any fatality that has happened or any high-intensity work, work-related injury that has happened, so on and so forth. These specific counts become part of BRSR core. Then gender diversity, so gross wages paid to females as a percentage of total wages paid. That is one parameter, and second is complaints on POSH. So it includes both total complaints and complaints that were upheld. Then next is enabling inclusive development. So input material sourced from MSMEs and within India. That is one parameter of the total purchases. And then job creation in smaller towns. So the indicator which we discussed a while back, covering how many employees are working in rural areas, in the semi-urban, urban, and metropolitan areas for that company, has to be reported in terms of the wage, how much wage is being paid out in these regions. Then fairness in engaging with customers and suppliers. So number of instances of data loss or data breach of customers as a percentage of total data breach or cybersecurity incidents, and number of days of accounts payable of the company. That's pretty straightforward. And openness of business, so how the company is doing business, purchasing and sale through trading houses, through dealers, through related parties, and the loans, advances and investments given to related parties also has to be disclosed over here. Now, coming to few challenges in BRSR reporting, what we have seen predominantly that happen, and this is a collection of very practical challenges that I have come across or my team has come across when we have delivered more than 150 projects in the past 3 years. And I think my colleagues who are working in the field will also probably relate to some of these challenges. So there are some general challenges agnostic of any specific area which happen in a lot of companies. So there are errors in data consolidation. Example being if a company has more than one locations, which is the case usually 10, 20,000, 3,000, 5,000 locations. What tends to happen is that there is usually one person sitting and collecting all the data, or a team of 2 or 3 people which get all the data from these sites and then they are consolidating it. So naturally, as a part of human error, there are high chances of errors happening when they are consolidating those numbers. Then incomplete data collection. Funnily enough, sometimes there is a client that I'm working with, and no one in the company knows exactly how many locations they have. Right, or it also sometimes happens that the central team that is working on BRSR data collection is not aware of all the locations that are there in the company. So sometimes they will miss a warehouse, sometimes they will miss a small locations. In most cases they miss the solar plant locations or the windmill locations, because electricity is consumed even there. So even that electricity has to be reported, right? So by incomplete data collection, I mean that the coverage of all sites, all locations has not happened. Then the SPOC, which is the central point of contact, who is responsible for communicating internally with all the different departments, is either not assigned or they change frequently. So this tends to create a lot of issues with regards to the knowledge of the data points, the knowledge of what are the gaps and how to resolve them, and the company has to start from scratch every time. Then in a lot of cases what happens is that the data that actually comes is coming from site locations or plant locations or project locations, and the staff that is giving that data has not been made aware about the ESG agenda of the company. That tends to create a lot of problem, because for them it is just another document they have to fill, but they are absolutely unaware of the implications or the importance of the data that they are going to submit. So imagine, there actually this scenario happened with a very large NBFC we've been working with, where they have more than 3,000-4,000 branches. and the data that came in seemed drastically high to the environmental experts on board with us. They have their way of validating the information, and so we went back to the client and we asked them that can we have meetings with all of these people to see if the data is actually correct. And it turned out that they didn't know that they had to convert megawatt hours into kilowatt hours, so on and so forth. And the amount of electricity consumed was actually multiplied by 10 than the actual consumption. Right. So before going into the final report, we corrected the numbers and everything. But this error happened is because the people who are giving that electricity consumption data did not know that they had to look at this particular format, or they had to convert it into the required units, right? So these are the kind of challenges that also happen. And then a fairly common challenge is that in the previous year's report, some data has gone incorrectly. So the company has to then again reopen the data for previous year and correct it in the current year. Some challenges specifically that come with BRSR core indicators. So intensity is to be reported starting previous year based on the output of the company, the output that they have generated. Now, a lot of companies are either not comfortable in sharing that output specific information, or they are not recording it, right? So that becomes a gap. Then water discharge does not get recorded in places other than where STPs or ETPs like treatment plants are available. So treatment plants automatically record how much water they have treated. Apart from this mechanism, a lot of the companies, in fact most of the companies, don't have a way of measuring water discharge, which is a mandatory disclosure. Then spending on well-being measures is not clear. Their internal definitions do not match with BRSR, so this creates a gap. Safety incidents are not being recorded. So, of course, the manufacturing industry is expected to submit reports on this. But, say, for example, the service industry does not have such a strict mandate, and they don't even get a lot of injuries, on site. So, for this reason, they're not even recording it. Even if there have been just 10 injuries during a year, they are expected to report it, but that data itself is not being maintained. Then to get information on job creation in small towns is also something of a challenge, because there is not a lot of guidance also available on how to do this for companies who are doing it independently without consultants. Data breach incidents are not being recorded, so this may come as a surprise. But even though the importance of data privacy has been established and re-established, and so many instances we get to hear about, but these a lot of companies have not put in procedures to track and record data breaches, right? So that's another problem. And trading house identification is not clearly available, which is also a part of BRSR core. In fact, uh, a colleague of mine recently filed an RTI, a right to information, to SEBI, asking for the definition of trading house, because it is such a big question now and companies are really struggling with this information. On a lighter note, some challenges on environmental front: water data is not being recorded, waste generation is not being recorded. So companies that do not have manufacturing locations or plants, they will just have office, and offices will have normal bins that are kept across the office, or pantry waste. And almost every company does not have the mechanisms to record that pantry waste, right? So that becomes a problem. Then e-waste sales certificates are missing. So companies are mandated to responsibly dispose of their e-waste to specified vendors. They're all doing that. However, this e-waste typically gets recycled by the vendor. But what tends to happen is that you cannot report recycled in the BRSR until you can show proof of its recycling. And the proof can only come from a certificate issued by the specified vendor. Now, while the companies are following the good practice of selling only to e-waste recyclers, they are not maintaining the certification of recycle, because of which the recycling cannot be reported in the BRSR. So it does not reflect very good on the company's part, while the reporting can be better just by these certificates. Then unrecorded electricity bill units. So a lot of the companies don't record electricity consumption in terms of units, but in terms of just finances, while BRSR is asking for the exact electricity consumption. Few sources bifurcations are missing, or incorrect units of measurement are being reported, like we discussed. Some social challenges like employer worker bifurcations are missing, KMP trainings are not there, training data is not being recorded, CSR beneficiaries, like we discussed, they are not being recorded, only the CSR spend is being recorded. Now, how do you extract the beneficiary information from that? Injury or fatality data is not there. Turnover rate discrepancy. So this is a very common issue where every company has their own formula of calculating employee turnover rates, but the BRSR has prescribed, SEBI has prescribed a very specific formula, which differs from the company's internal formula in a lot of cases. So there comes a discomfort from the HR teams, to use that particular formula. And complaints data is not being recorded. So complaints from employees, while they are being resolved, but the data is not maintained on how many complaints were received. And BRSR is asking for such data for all stakeholders. Then governance related issues, in some companies, ESG committee is not formed, or policies are not being evaluated by the board, or the policies are not approved by the board, which are all mandatory. Then procedures are not available to back the policies. Grievance mechanisms are not available. The policies do not cover the value chain partners, which is also mandatory as per BRSR. The company has set no targets, or if they have set the targets, they are just in words, and they are not doing much about the targets, and they're not updated. And the previous year's notes are not actionized. So these are some of the practical issues that we face with BRSR reporting. This concludes the BRSR section, and we'll move on to IFRS now. If anyone has any questions so far, I'd be happy to answer.
Sir, there are a couple of questions which has come. One is the difference between the BSR and the ESG.
Okay. Okay. So that's a good question. Actually, it's the most basic one. ESG is called environmental, social, and governance. It is a way for companies to show non-financial performance. ESG is framework agnostic. Any framework or the frameworks in the world are used to report on ESG parameters, right? So say, for example, BRSR is a framework. It is a set of questions that companies can use to report their ESG performance. GRI is a framework or is a set of questions that companies use to report on their ESG performance. So performance on environmental parameters, performance on social parameters, and governance parameters. In countries where no type of reporting is mandatory, the companies can choose to report on any parameter that gets covered as per ESG. So ESG is a collection of information which is non-financial in nature, of risks and opportunities of a company, and BRSR is a framework to report on ESG parameters. I hope that answers the question.
Yeah, definitely. One more question is on the ISAE 3000, whether it has been revised.
Yes, I think it has been revised a couple of years back.
Okay. And one more question, I think, which specific area in BSRS would need to be upgraded or aligned to match global benchmark of IFRS S1 and S2?
Good question. So I think when we look at IFRS S1 and S2, IFRS S1 is general strategy of the company, mainly around governance and strategy. And S2 talks about climate specific risks and opportunities. So to align mainly with IFRS S1 and S2, BRSR Section B, which is the management disclosures, and BRSR Principle 6 need to be upgraded to include a lot of technical parameters to then align with S1 and S2. However, having said that, you cannot draw a direct comparison with S1 and S2, and BRSR is quite a wonderful framework, to be honest, which has been, made specific to the Indian scenario, to the Indian companies. And IFRS is very specific to investor needs, and it is not tailored to any country or region, right? So we'll have to see in the Indian context, what is applicable and what makes sense. And in fact, BRSR framework need not be, sort of updated. Companies just can do an additional reporting on S1 and S2 and publish it as part of their sustainability reports.
Thank you. No further questions.
Okay, thanks. So halfway through my assigned time, I'll try and stick to the time allotted to me. Jumping into IFRS S1 and S2, this is a global reporting framework. So I want to cover, like we did in case of BRSR, where it came from and what was the need and why was it, formed in the first place. So uh, the International Sustainability Standards Board, which is ISSB, issued its inaugural standards on sustainability, which is S1 and S2, on 26 June 2023. So it's a relatively new framework which has come out with the purpose to create a global baseline of sustainability disclosures for investors in financial markets. So its entire purpose is wrapped around, sort of addressing the many questions and gaps in the sustainability reporting vis-a-vis financial metrics. So IFRS does a very, very deep dive into the financial impacts of the sustainability related risks and opportunities of a company, and the intention is that anyone, any person, or investor or a fund that is interested in investing in the company should be able to look at the IFRS report, understand what is the future possible or potential impact of various parameters of a company on its financial cash flows, right, and then make an informed decision on their about their investments. The need is what the ISSB thought or states as the need is to create and respond to the global demand for consistent, high quality sustainability information amid a fragmented reporting landscape. So, in the first couple of slides, we saw that there is an entire universe of frameworks that is available, for companies to choose from, which tends to create a lack of comparability across different company reporting, right? So this framework will resolve the problem for investors that to make informed investment decisions, they only need to look at the IFRS reports of companies. And the core objective is to develop a global standard to meet investor information needs, support global capital markets, and ensure comparability with local disclosure requirements. This is a quick look into how the IFRS has been adopted across different years. So very initially in 2024, only Bangladesh, the EU, and Turkey had adopted, and it jumped quite a lot between from 2025, and is expected to increase even further in 2026, covering almost all geographies, barring say Sri Lanka or yeah, I think just Sri Lanka over here that does not have any plan of adoption, and in 2027, even further companies. So from what we see, over here is that there is a rise in IFRS adoption, and it's becoming more and more relevant for companies across the world, and that explains also the reason why SRSB has chosen this, very important subject today to have this webinar. Now, the structure of IFRS, it is divided into two parts, IFRS S1 and S2. S1 covers general requirements for disclosures of sustainability related financial information, and S2 is specifically only talking about climate related disclosures. Sorry. So in terms of coverage of IFRS, these are the 5 key aspects that the IFRS S1 is talking about quite a lot in detail, and this becomes the core of the information that gets available in S1. So material information, the companies have to comply with the requirements of S1. When they do that, they will disclose all material information about the sustainability related risks and opportunities that could reasonably be expected to affect its prospects in terms of cash flow generation, right? So any information that is deemed material, right, with regards to sustainability related risks and opportunities only, not simply just financial risks and opportunities, that could have a reasonable impact on its cash flow prospects, generation of cash flows. Then a fair presentation to provide a complete, neutral, and accurate depiction of risks and opportunities. So I was going through Emirates report, and they have done an IFRS reporting. They have, I think, selected only 5 or 6 material topics as such, and they have done a very wonderful job of reporting on all the core pillars of IFRS, which I will, if time permits, I will take you through the report as well. Then reporting, how is the reporting to be done? It should be the same as reporting. The reporting entity has to be the same as the financial statements and has to be published along with publishing the financial statements. So if a company is publishing financial statements on a standalone basis, they should also publish IFRS on a standalone basis. If they are doing consolidated financial statements, they should also consolidate the IFRS reporting and publish along with the financial statements. Value chain information. So a disclosure of same information that the company is publishing for itself has to be disclosed for its value chain as well. The IFRS forms very close connection between different types of information. So connections between risks and opportunities, connections between disclosures on governance, strategy, risk management, and metrics and targets, and connections between sustainability related financial disclosures and financial statements. So these are all interlinked information that you will find in an IFRS report, which makes it again easier for investors to understand what are the risks and opportunities a company has, how is it planning to cover it with regards to governance, strategy, risk management, and targets, right? And how does it relate back to its financial metrics and financial statements? So this is the broad look at IFRS S1. Few answers that S1 will provide for potential investors is who is reporting, what is the entity, connections and information, what we just discussed, what to do with the changes in estimates and errors, interactions with law and regulations, timing and location of reporting, materiality, which is the meaning of the assessment itself, and the quality of information. These are some of the key answers that it provides. So IFRS has these 4 pillars, the S1 specifically. Even S2 has to be reported on these 4 pillars only. The first pillar is governance, and the company has to report on the governance processes, controls, and procedures the entity uses to monitor and manage the sustainability related risks and opportunities. The questions or the specific disclosures have to be made on board oversight, the management's role, and board's involvement in the decision making. The next pillar is that of strategy. The company has to, the approach has to be reported, which the entity is using to manage the sustainability related risks and opportunities. So how is the company managing, these risks and opportunities? Right, that is one. So reporting itself of the risks and opportunities, the time horizon. So IFRS is asking to define the time horizon between short, medium, and long term, and this is very tightly aligned with how the TCFD reporting was happening. And resilience of the strategy. So how resilient is this strategy of addressing these risks and opportunities with different scenarios? So for example, if a 2-degree rise in temperature does happen in the world, how resilient is this strategy? Will it adapt to that scenario or not? Is one of the parameters the company have to assess and report. Then on risk management, the process the entity uses to identify, assess, prioritize, and monitor sustainability related risks and opportunities. So this is a little similar to BRSR and GRI also, where we are asked, how the company has identified these risks and opportunities. How are you assessing it? What is the mechanism to understand its intensity, magnitude, applicability, resilience, so on and so forth. How has the company prioritized these risks only vis-a-vis the other possible risks also? And how are you monitoring these risks and opportunities? Then risk identification and assessment, risk management process, and risk assessment tools. Then the entity's performance in relation to sustainability, risks and opportunities, including progress on targets. So climate related metrics, targets and progress reporting. So very specific targets have to be taken on GHG emissions, so on and so forth. I'll take you through that in S2. Companies have to take concrete quantifiable targets and report on progress also year on year. This is one key difference that someone asked a while back. What is the difference between BRSR and IFRS is this and the core. Then with regards to IFRS S2, the purpose of S2 section is that it focuses on climate specific risks and opportunities and their impact on business strategy and financial performance, right? So while S1 is talking about the general sustainability related risks and opportunities, S2 is specific to climate risk, which was TCFD previously. Then the scope is that the companies must disclose information on GHG emissions, the transition risks and physical risks, and the climate resilience. So not only these are the four parameters specified. All three, scope 1, 2, and 3, get covered as part of GHG emissions. The transitional risks, the physical risks, and the climate resilience based on the scenario analysis that we talked about. Then governance, strategy, and risk management. Companies are to disclose governance structures and processes for managing these risks, how climate risks are integrated into business strategy and long-term plans, including transition and physical risks. Disclose processes for identifying, assessing, and prioritizing climate risks, report on climate resilience, and the use of scenario analysis for assessing future impacts. So again, very detailed, very specific, very quantifiable information becomes part of IFRS S2. I'm sorry, this heading is incorrect. Please ignore that. So metrics, targets, and emissions disclosures. Disclosure metrics which are used to monitor these climate risks and opportunities. So for example, how we have in the BRSR framework, what are the KPIs? How is the company measuring progress? If they have taken employee well-being, as a sustainability related climate risk, yeah, it would be a risk. So how are they exactly measuring that? How are they quantifying that? In case of climate risk, if they have taken, say, for example, renewable energy as a climate opportunity, so how are they measuring? They need to then measure how much renewable energy they are generating, how much renewable energy they are utilizing, how much actual reduction of emissions they have done, so on and so forth. So what are the metrics that are used to monitor, right? Data. Then companies are to set emissions reduction targets and GHG goals. That's very specific. Disclose scope 1, 2, and 3 emissions, and specific disclosures for financed emissions for financial industry have also to be reported. Then key reporting requirements and transition relief. So the companies are to disclose current and anticipated financial effects of these climate related risks, right? So what are the current effects that these risks are having on the company's cash flow, and what are the anticipated future impacts on the company's cash flows that possibly can happen through these identified climate risks? That analysis has to happen and report to be reported. Then companies can refer industry specific requirements for climate disclosures, ensuring relevance to business operations. So the companies are free to choose metrics that are relevant across their industry and to make themselves more comparable and relevant, in their industry vis-a-vis the investor needs. In the first year, this is with regards to the transition relief. So whenever a company chooses to start reporting in the first year, the focus is on climate related risks and GHG emissions only. In the second year, full disclosure of all sustainability related risks and comparative climate related information has to happen. It has to take place. I think we do have some time, so let me show you the report that I had taken out as an example. My screen is visible?
Yeah.
Yes, ma'am.
Great. So this is the reports by Emirates NBD Group. They published it in 24 in alignment with S1 and S2. It's quite a good report actually. When you do get time, please go through it. So if you see the content index itself, right? It is covering all the 4 pillars that we saw: governance, strategy, risk management, and metrics and targets, right? It has given specific disclosures in the appendix also. And it has talked about its materiality. So I want to start with the materiality and then take you through the rest of the things. Right. So they have disclosed here how exactly they have done the materiality assessment. So they have in fact conducted the assessment in line with GRI, and they have worked on top of that, and they sort of ask their stakeholders for their inputs through surveys, both internal and external stakeholders. They have disclosed what all stakeholders have been part of the disclosures of the survey, and they have reported these 5 top prioritized material topics, right? That was as a conclusion of their service. They've included sustainable finance, data privacy, cybersecurity, corporate governance and ethics, diversity and inclusion, and climate related risks and opportunities. So as you can see, these are very broad topics, right? And they what we were just talking about, having metrics in order to report on these topics and on these risks and opportunities. So the company will have to decide on how they are going to report and manage and track data on these parameters. I'll so in governance, they have talked about their overall governance. I want to show you the strategy part. Yeah. So this is a very well broken down section. So they have, reported their sort of targets and achievements across various parameters, right? So their achievements have been mentioned, their targets, and what they are going to focus on has been mentioned over here. And then further details of each of these has been given. They have then gone ahead and identified sustainability risks and opportunities across the value chain also, which is a part of IFRS S1 that we spoke about, right? So they have seen upstream, operational, and downstream, and what are the risks and opportunities they have identified across the value chain for them. And they have also given the definition of the time horizon, right? So companies are free to define the time horizon also, short, medium, and long term. So they have taken 2030 as short and up to 2050 as long term. So if you see here in terms of sustainable finance, they have given the impact materiality, what is what is the real impact that the company is creating in terms of positive impacts, sorry, and what are the negative impacts, whether it's an actual impact or a potential impact. They have given that segregation. Financial materiality also they have given. The second topic was data privacy and cybersecurity. So on that also, similar lines, they have reported on impact materiality, which is GRI based, and then financial materiality also they have reported, which is the IFRS requirement. So it's a very good structured way of going about reporting. And then they have moved on to talk about strategic management of the risks and opportunities across value chain. So how are they going to manage these risks and opportunities in their value chain? So they have given steps: assessment and management of upstream risks and opportunities. Then they will have the downstream also, as well as the operational risks and opportunities. Right. So this is a short look. I don't have time to take you through all of it. But I would recommend, yeah.
There are a couple of questions, if you can take it before you proceed. Yeah.
Yes, please.
What is the difference between GRI based SR and BRSR? Is it not a duplication of efforts?
Okay, so in terms of a GRI based sustainability report, sorry, is my screen visible?
Yeah, visible.
Okay. Yeah, so see, let's speak from the context of India right now, because that's the focus of today's discussion. GRI 1 is not mandatory for us. So any company that's choosing to report on GRI is doing on a voluntary basis. BRSR is mandatory for top 1000 listed companies, so there is no question of non-reporting. Second, BRSR goes as part of the annual report of the company. Why should companies that are doing, say, sustainability reporting, what are the possible reasons, right? So if you see the BRSR framework, it is, um, I, I would say, a little restrictive in the way information is asked. Taking the example again of CSR, just as one of the many examples, BRSR is only asking for 3 or 4 questions in the CSR section, which is one regards to the aspirational district, how many beneficiaries, total how many beneficiaries, and what projects the company is doing. There is no space for the company to report on the details of these projects. That is one. There are many such other examples. For example, in the principle 6, the question number 1, which talks about energy consumption, fuel consumption, the intensity is how much renewable energy, so on and so forth. It's just numbers. It is just data that goes out. A person cannot really understand the story behind it. Was there a was there a period of transition from renewable? What is the kind of investment that the company is making in renewable? What is the kind of effort that the company is doing? What initiatives it is taking to become more sort of energy efficient, to become more green, right? All of this goes missing in the BRSR report. So sustainability report is nothing but can be compared to a marketing and narrative building document for a company that wants to really showcase all of the good initiatives, all the good things that they are doing with regards to sustainability. And sustainability report, you can either align with GRI or not align with GRI. It's an open document, right? Most of the companies align with GRI is because GRI has a lot of scope to talk to a lot of different stakeholders, a lot of different stakeholder groups. That is why companies choose to go with GRI, because it covers indicators that address the information requirements of different stakeholder groups. I
Thank
hope
you.
that answers.
Yeah, yeah. It's one more question is, what about India in adoption of IFRS in that slide? I think I'm not
Yeah.
clear about the question.
Yeah. So the slide I showed as per evolution of IFRS. So
Yeah, yeah.
unfortunately, there is not sufficient data available
Okay.
right now on IFRS, adoption even across the world. A lot of reports have also not been published yet because it's a very, very recent framework, just about 1.5 years ago. So I'm expecting to get more data, in the future. But in India, I can confidently say that very, very few, only the top companies are reporting with IFRS, not many. A lot were doing TCFD reporting, but IFRS has not picked up so much yet.
Okay. Okay. There's one more question on the consolidation. How the consolidation is possible, as there are no guidance with respect to the consolidation.
In the BRSR, I'm
Yeah.
assuming this is the
Yes, yes,
question.
yes. Seems to
Yeah,
be.
that's a gap actually. There is no guidance available, but the general rule of thumb is to include all of the companies, one, that become part of the parent company's reporting, and two, cover the similar information across all units, across all companies. So what information you are collecting for the parent entity, the same exact information has to be collected for all of the other entities as well. There cannot be a scenario where 100% of the parent entity is included, all sites locations, but for the subsidiaries or other companies that are part of the group, say only 1 or 2 locations are included, then that will become incomplete reporting. So the best way to go forward in this case is to collect first company level information for all of the entities, and then consolidate it by totaling out or by averaging out the information as the case may be, and report at a consolidated level.
Okay. I think there is one more question which we missed is on is BRSR Lite is a first step toward SMEs
I'm sorry, I didn't catch that.
for the SMEs enterprises, whether BRSR Lite a first step.
Uh, yeah, that could be the first step. But like I said the last time also, with regards to MSMEs, the first step should be to do a gap analysis with the full BRSR, because any which ways it's not become applicable, and might as well prepare for applicability of the entire BRSR, because it is also a very good look into the company's health of the non-financial parameters.
Okay, okay. There are no further question at present.
Okay. So now moving on to the second last segment for today, which is a comparison into BRSR and IFRS. I think there is, sorry, one second. Can you see my screen, please?
Yes, yes.
Okay. So the first level of comparison, I thought we should start with the definition of sustainability itself. How are the two frameworks defining sustainability, which I've taken as it is? The BRSR is defining sustainability as the outcome achieved by balancing the social, environmental, and economic impacts of business. It is a process that ensures that business goals are pursued without compromising any of the three elements. And this is very close to the United Nations definition also of sustainability, if you see. While IFRS has gone a step further, it is saying that sustainability is the ability for a company to sustainably manage resources and relationships with and manage its dependencies and impacts within its whole business ecosystem over the short, medium, and long term. Sustainability is a condition for a company to access over time the resources and relationships needed, ensuring their proper preservation, development, regeneration, and to achieve its goals. Right. So it's a little bit more detailed definition, while BRSR covers the broad umbrella of the meaning of sustainability. The meaning of materiality, right, is also contrasting between the two frameworks. So BRSR is, referring to SEBI's LODR requirements when it is defining materiality, and the requirements state that what is material is any information, the omission of an event or information which is likely to result in discontinuity or alteration of the event or information already available publicly. The omission of an event or information is likely to result in significant market reaction if the said omission came to light at a later date. Third aspect is the omission of an event or information whose value or the expected impact in terms of value exceeds the lower of the following. So 2% turnover, 2% net worth, or 5% of average of absolute value for profit and loss after tax. All of these are material with regards to BRSR. So this is what companies should keep in mind while doing their materiality assessment. And IFRS is concise. It says that information is material, and also IFRS S1, this materiality definition is the same as the IFRS accounting standards materiality definition. So they've tried to establish a commonality with the accounting standards here. And they are saying that information is material if omitting, misstating, or obscuring that information could reasonably be expected to influence decisions that primary users of general purpose financial reports make on the basis of those reports, which include financial statements and sustainability related financial disclosures, which provide information about a specific entity. And this definition has been referred from SASP, the CDSP framework, and industry practice. Which information is considered material by BRSR? So there is no specific sources of information or framework that are designated or specified for companies to sort of refer to while defining materiality. But IFRS S1 is saying that companies should look at the SASP, CDSP, GRI, normal industry practice, and in some cases use CSRD also to define their materiality. So a further comparative analysis by a few aspects, starting from who has issued it. So BRSR has been issued by SEBI, the Securities and Exchange Board of India, and IFRS has been issued by the ISSP. The purpose of BRSR, as per the official document, is to help companies improve sustainability performance and social responsibility through clear standardized reporting. The IFRS purpose is to provide global guidance for sustainability disclosures, focusing on investor needs specifically. Stakeholders, so BRSR addresses questions of all stakeholder groups, very similar to GRI. IFRS only is designed for investors. In terms of structure, the BRSR has three sections, section A, B, and C. IFRS has two sections, S1 and S2. The contents for BRSR that it has, the main data goes in the 9 principles, and for IFRS, it should be segregated into the 4 pillars that we saw. BRSR in the Indian context is mandatory for top 1000 entities, and IFRS is voluntary. The coverage for BRSR is top 1000 listed entities, and IFRS does not have a specific coverage. The BRSR align with the NGRBC framework and the GRI framework largely, and IFRS is around TCFD predominantly. BRSR report is expected to be published with the annual report, and IFRS also is published along with the financial statements of the company. In terms of governance requirements, so BRSR requires disclosures on board composition, corporate governance practices, and oversight of ESG issues. IFRS S1 focuses on governance of sustainability related risks and opportunities, and S2 will talk about climate related risks and decision making processes. In terms of board oversight, BRSR emphasizes the role of the board in overseeing sustainability initiatives. And S1 and S2, so S1 talks about specific governance processes around sustainability risks, and S2 will focus on governance processes of climate risks. With regards to strategy, BRSR requires strategic integration of ESG and aligns with UN SDGs. IFRS S1 companies should explain how they are tracking and integrating sustainability risks into business strategy. And similarly, S2 will focus on the same thing for climate related risks. In terms of risk management, BRSR has disclosures on how risks like material risks are reported throughout the BRSR report, and how they are managed, what is the mitigation strategy the company has, and whether it has a positive or negative financial implication. That's the only question. IFRS has given general requirements. S1 will have general requirements on managing these risks, and S2 will have specific requirements on managing the physical and transition climate specific risks. Metrics and disclosures. BRSR requires quantitative data on ESG parameters. In terms of IFRS, companies must disclose performance metrics for all of these identified risks, and specifically GHG emissions in S2. In terms of target, BRSR only encourages setting long-term sustainability targets, and there is no specification with regards to climate targets or quantitative targets as such. But S1 and S2 both require specific targets on sustainability-related risks, including emissions reduction and gross and net targets. Right. So these are the main points of comparison between both of the kind of reporting. Any questions, sir, so far?
Yeah. I think there's a question whether the IFRS S1 and IFRS S2 is mandatory for top 100 listed companies in India.
I think it has become recently it has become mandatory, if I'm not wrong.
Okay.
Yeah.
What is the applicability of S1 and S2 in India? So I think it's the same
It is
thing.
the same, yeah.
Yeah. To what extent the CAs would require assistance from the technical expert in the ESG area?
Okay, so it's a little bit of a broad question, but CAs are, very trained in the financial aspects. The further expansion, so in my team also, a few chartered accountants work, and they are very good with the assurance part, with assessing the correctness of information, so on and so forth. But a further addition can happen through experts on the environmental front. Which these experts who are trained in conducting calculations on emissions, who are trained in doing site visits and analyzing the environment specific information of companies.
There is one more question on the materiality definition, I think, which is shown, I think, couple of slides before. Whether it is coming from the regulation 30 of SEBI LODR?
Yes. Yes.
It is coming from, okay.
Yes.
And not from the BRS directly?
No, BRSR has referred to that definition. There is no other definition given by BRSR.
Okay. The participant want to know, okay, which Indian companies have adopted S1 and S2?
If you find that, please tell me also. I failed to find that. Please enlighten me as well. I couldn't find any publicly available reports as such so far.
And there is one more good question. If the global company has adopted S1 and S2, whether its Indian listed subsidiary is also required to do it?
If they are doing reporting on a consolidated basis, yes, then the Indian subsidiary will also be required to do it.
So they are asking whether with respect to the Unilever or Pfizer, where
Mm,
the operation
yeah.
multinational operations are there.
Correct, correct. That's absolutely right. So if you see, in terms of the scope and coverage that we talked about IFRS, the same has to be followed. What the way the company is doing the financial reporting, if they are doing consolidated financial reporting, they must be including their Indian subsidiaries also. So if that is the case, then yes, IFRS S1 and S2 should also include the Indian subsidiaries.
Okay. No further question at present.
Okay. So I'll take about 5 more minutes to go through some future trends, that are expected, very specific to data, very specific to the kind of information we can expect to see. Just 1 second. Yeah, can you see my screen?
Yeah.
Yeah. So one thing is definitely true with regards to the Indian context is that we are seeing a rising trend with regards to the expansion of sustainability and ESG reporting that's happening. I think someone asked a very pertinent question a while back that why, does sustainability reporting not count as double reporting? Is it not double effort? But as you can see here, it is just a progression for a company, to expand and include more and more information as part of their sustainability reporting and disclosures. So companies who are, there are companies that are not publishing BRSR, maybe not mandated to do so. They have started to publish ESG summaries as part of their annual report, just to include a segment specifically that talks about sustainability and what are the initiatives and activities the company is doing. The next level is of course the BRSR report, which is done on compliance basis, but I'm working with a couple of companies who are not in the top 1000 list course but are voluntarily doing BRSR reporting. Their main intention is to be comparable and relevant across the industry peers who are in fact in the top 1000 listed companies, and there is also a demand from their investors to do the same and report on ESG parameters. The next progression, like we discussed, is a sustainability report, which is a broad based report. It can include any framework or not include any framework. It can be like an impact report. It can be like a financial impact report of sustainability parameters. Company can choose to take any form to build this kind of report, to structure this kind of report. And finally, an integrated report, which is the largest set of report. It includes what we discussed, the six parameters, six capitals, and as part of an integrated report, all compliance reporting, including financial reporting, goes out in one document itself of a company. If you want to see a good example of an IR of an independent Indian company, please check Mahindra's integrated report. It's quite great, and it's a must look for anyone who's interested. This is with regards to reporting trends. As I introduced, in the beginning, I have recently published a paper on trends of investor preferences on ESG. And out of that research, one finding that I had was what are the key focus areas that are emerging based on ratings like MSCI, DJSI, global ratings, and based on investor preferences. So these are the 5 buckets that I see as rising in importance, starting with emissions, value chain, circular economy, people, and community. So in terms of emissions, specific focus on offsets and credits, scope 3 emissions, renewable energy, and everyday operations of the company. Reporting on these and targets on these are expected to rise and gain more traction than even now. In terms of value chain, sustainable products, product innovation, supplier risk mitigation, and agility to evolving markets. right? These are the few parameters that are gaining more traction now. Circular economy also is coming to center stage, wherein renewable energy, utilization of energy, water conservation, recycle plastic and e-waste, and waste reduction and reuse will become mainstay when we talk about waste management. In fact, there was a proposal that had come out from the Maharashtra industry to set up a circular economy model for industries in the outskirts of Bombay, and I think it is under construction now. In terms of people, this is the fourth most important focus area. So topics like flexibility and work culture, we're already seeing a lot of talk about it. Unfortunate news gets reported across professional platforms of young people giving in to the stress of workplace, so on and so forth. So these issues are becoming more and more pertinent, and safety and wellness, right? Diversity and inclusion, and learning and development of employees. So now also looking at the fact that the generation that's joining the workforce is millennials and Gen Z. And this is a generation that is very, very strongly focused on the kind of company they want to work for. If the company that they are working for, is a responsible corporate, what are they doing for the larger community? What are they doing for society? What kind of environmental initiatives they are taking, so on and so forth. So the people pillar is increasingly becoming important across the world and in India. And finally, in terms of communities, so sports and youth development, women empowerment, disaster relief and response, and rural development are the topics and areas that are going to gain more and more traction going forward. Right. So thank you so much. This is all I had to share for today.
Can we take up certain questions which has come?
Yes, please.
So specific question is on the, can you throw some light on double materiality and materiality for BRSR and IFRS?
Okay, so double materiality and materiality is kind of agnostic of framework. Double materiality is nothing but normal materiality, that is impact materiality with its financial implications. As to say an impact happens that a company has identified as material, what are going to be the financial implications on the company of that impact happening? So say for example, an impact that they have identified is water management in water stress areas. Now the company also has to identify what will be the financial impact, financial implication on the company and their cash flows if water stress situation actually happens and they are unable to meet their day-to-day business requirements, just as one simple example. So double materiality is just an extension of impact materiality, which includes the financial aspects of the impact materiality.
Understood. Next question is on the, how can a smaller or mid cap company start preparing for the sustainability reporting if they lack internal expertise?
If they lack internal expertise, okay. uh, so the first step would be then to either hire an expert full time, or if that's not a possibility, speak to consulting firms. There are now a lot of consulting firms that are also small in scale and might be more affordable than many of the larger firms. And as a kickstart, like I gave the example of a couple of companies a while back, as a first year target, look at identifying what are the gaps and what you need to do to become ready for BRSR reporting. And some of the key things that I advise my clients when I'm working with them is to start by drafting of all the policies, of all the 9 NGRBC policies. Keep that in place, get those signed by the board, get those approved by the board, put in place mechanisms to record and track data, right? Standardizing all of these sort of processes takes at least a year or two for companies to make that operational, even the large companies. So this is a good starting point for any small and medium firm.
There is one more question. How do assurance requirement under IFRS S1 and S2 differ from what are currently expected under BRSR?
Okay, so in my knowledge and in my experience, I've not seen IFRS define specific assurance requirements as such. They are there in BRSR for sure, and the assurance requirement in BRSR are applicable for the BRSR core indicators only, like we discussed.
Okay. There's one more question on IFRS is to focus heavily on climate-related disclosure. Do you think BRSR sufficiently address climate risk and opportunities?
So BRSR is not asking at all for climate risks and opportunities. So the Indian companies that want to actually report that have been aligning with the TCFD reporting, because the TCFD, which is now IFRS S2, gives very clear guidance and direction as to how to do the scenario analysis and how to do climate assessments. BRSR has not yet included climate scenario analysis.
Okay. Next question is on what is your view about SEBI shift from assurance to assessment of sustainability disclosure?
Right. So this is, of course, for the value chain parameters. And the idea is that, it is what we discussed a while back in order of ease of doing business. So for the companies, the BRSR core assurance, which was mandatory, is still mandatory. But the assurance on value chain parameters has been relaxed in light of the lack of availability of data across the supply chain and the lack of standardization of data, and the expertise and specializations available across the small and medium and MSME segment of suppliers for companies, and they were facing both sides, the company as well as the supply chain was facing great amount of issues. So I think it's a great move, to make it easier, to make the transition easier. Now I'm working with one of the top 50 companies, in fact, and they were also struggling as to how they will even begin value chain reporting. But with this ease, what I'm doing with them this year is that we are just identifying who all become part of the value chain, who all become part of the top 2%, of the value chain, and what all. This year, we are just focusing on doing a lot of training and workshops for the value chain partners. Right, instead of just jumping into asking them for data. So this removing the voluntary requirement has in fact given companies time to prepare their supply chain partners and establish genuine working relationships before jumping into compliance, is what my view is.
There's one more question on the CSRD. Now that the CSRD requirement have been pushed back, do you think that regulator will be more lenient and somewhere dilution of sustainability reporting which will happen in future?
Not really. So CSRD has been very specific to only one region, which is EU. And in case of Indian companies, only to companies that were supplying to CSRD. And in fact, if you speak to those companies, they will be quite happy. And even the EU companies, because CSRD requirements have been very, very stringent and strict. However, having said that, it does seem like a step back, but companies are still free to report on GRI. Companies are still free to report on other frameworks, and there are country specific frameworks that are continuing. So I don't see any step back as such, and I've not even felt the impact, to be honest.
Okay. There's one more question which has come on materiality. Materiality threshold with respect to BRSR, which was shown to be applicable to entire BRSR as against IFRS S1.
I think the question is not clear to me.
Not clear to me.
No,
Okay.
sorry.
Technical team, any other questions are there?
No, sir.
No. Okay.
Thank you, ma'am, for the insightful session. I kindly request to Tima sir to give vote of thanks.
Thanks. It is my proud privilege to deliver the vote of thanks for today's enlightening session. On behalf of the entire team, I extended heartful gratitude to each of you for joining us today's inciting session on sustainability Indian BRSR versus IFRS S1 and S2. Your active engagement and thought-provoking questions have truly enriched our discussion. Our esteemed speaker, Ms. Anchal Mathur shared invaluable insight into BRSR and IFRS S1 and S2, shedding light on the sustainability disclosures and best reporting practices. Her expertise has significantly deepened our understanding of this critical framework. As the field of sustainability reporting continues to evolve, we remain dedicated to equip professionals like you with the knowledge of globally recognized standards. We encourage you to stay connected for upcoming sessions and resources that will further enhance your expertise. We encourage you to stay engaged with us and remain committed to exploring and advancing sustainability practices. Our upcoming webinar, as scheduled every Thursday from 4 p.m. to 6 p.m., will deliver into various emerging themes in the sustainability. Thanks you once again for your participation, and we wish you a productive day ahead. Thanks.
Thank you, sir. Thanks a lot.
With this, we conclude the session for the day.
Thank you, everyone.
Have a nice day.